Joining us now is ING Direct USA Chairman and President Arkadi Kuhlmann. Thank you so much for joining me here in studio. Tell me, a higher savings rate is somewhat good for you, I would think, here with your business right now.
Absolutely. I mean, we're a savings bank, so trying to lead Americans back to savings and getting them to save more is a good idea. Of course, as you know, in the economy, we'd like to have a little balance of spending and savings, right, so that everything works right into proportions. The bigger problem we have is that we've done a recent survey with Harris Interactive, and that basically 44% of Americans, right, are really not yet quite ready for what their retirement is going to hold for them. They really don't know what the amount is going to be that they would need, and they're really quite uncertain about how long a period they're going to have to sort of save for. So people are now looking at ways that they can basically save money and then see what they can do about investing them. And so with ShareBuilder, for example, our share broking investment firm, we basically said, well, look, why don't you basically start an IRA account and basically get on the program of automatic savings, right? So part of the response to the economic crisis is to save, but to try to do it in a more program kind of fashion.
I try to encourage them not to just put it in a traditional savings account, but also put that in brokerage accounts.
And so on, as a way of basically getting that going over time. So it's the longer kind of view that we need in society. So if you think about your home should be actually a home where you actually have some equity in it, maybe even have it paid off by the time you get to retirement. You'd love to basically save so you can basically deal with some of the bumps that come along in life, right? And that's one of the things that we're finding is that people are now beginning to rethink about, well, how much should they be spending? How much should they be saving for retirement? And then, you know, what do you do about your house?
Yeah. Let me ask you, with the savings rates right now, I mean, part of the value proposition of ING Direct was that you could be competitive on the rates that you were offering to consumers because you didn't have the retail operations. It was all online.
Right.
Primarily online.
Right.
You can't get much when you put things in a savings account these days as a consumer. No. So it's not necessarily forcing your hand to be more competitive there. What can I earn on a savings?
Oh, right now you can earn, you know, 110 basis points, 1%, 1.25%. It's not a lot. I mean, there's no question that the savers are paying for the mistakes of the mortgage market, right? So, I mean, somebody's paying. On the other hand, mortgage rates are pretty low. I mean, we're at, you know, 3.9%, right?
And you have been vocal about your concerns here in an editorial that you wrote in January in the Wall Street Journal. You were saying that the government's plan to try to help basically keep homeowners in their homes and stave off foreclosure is actually not encouraging these mortgages to be renegotiated. Right.
I mean, one of the problems are the intentions are correct, right? But, you know, you still can't get anywhere if you don't have the wherewithal, the income, right, to be able to actually build some equity and pay down that mortgage over a period of time. Is the sort of concept that the only way we're going to get equity in a home is to basically have the market lift up prices. Now, that should be icing on the cake, but that's not really the cake. The cake is that you have a mortgage, and over time you want to be able to pay that off so that you have the reserve of the equity in your home. So if you're going to then, for instance, do loan modifications, which the government would love to do, you need to be able to make it so that people can actually get back on a program where their income can match what they can pay off.
But mortgage servicers, as you point out, get fees if a home forecloses.
Yeah, there's a lot of people making money right now when things go in default. I mean, there's appraisers, there's servicers. Everybody contractually is making a lot of money when basically houses get into foreclosure, and we've got 2 million of them along the way.
Any kind of traction in terms of an audience to these comments? Have you heard anything?
Yeah, I think certainly out of the administration there's some very positive comments that they're trying to basically adjust now the servicers and trying to actually give them more control over what they can actually do in terms of renegotiating deals. The banking industry at large is responding by basically saying, okay, look, there's a trial period, but let's try to make this permanent. Trying to find out sustainability or affordability for you to basically stay in your home when your home is foreclosed is pretty tough when you actually figure out that the reason you're not paying is because you don't have the money.